A number of big deals announced over the summer have sparked optimism for an M&A rebound. Dealmakers are seeing improved business confidence, easier financing, and pent-up demand from buyers who are ready to make acquisitions. Joining us right now is Aiyengar, who is JPMorgan's global head of M&A, the sole head of M&A at this point, too, I should point out. And Anu, let's just talk a little bit about where things are, because we had banner years and then things fell off a cliff. People got worried. There was a lack of confidence. Where do things stand right now?
So things are mixed today. So normally the global M&A market is about $4 trillion. The happiest was in 21 when it was 6. Right now it's about 2. Year to date. So by year end, where would we be? I don't know, 2.5, 2.75, something like that. So that looks grim. So what causes optimism, if you can have that, is if you can have more certainty. Because the biggest thing which I think is holding people back today, whether that's strategic or sponsors, is the uncertainty. I don't know where rates are going to be. I don't know when inflation is sorted. I don't know what sorted means. Does it 2%? When 2%? Government spending continues to be inflationary. And I don't know what the new normal for the consumer is. What is the consumer behavior pattern going to be? Pre-COVID? Post-COVID new normal? What is that going to be? That's just too much uncertainty. So it's a weird environment where for 18 months we've lived with a recession right around the corner, but it hasn't come. You go and meet every company. That company's CEO says, my business is doing great, but I'm really worried about the future.
Is anyone scared of trying to do something because of the FTC?
That is a part of it, but I'd say the number one issue is the uncertainty and the lack of confidence.
There's a new normal in the FTC, too.
Yeah. But they don't want to look stupid, right? They don't want to look stupid for paying the wrong price.
Yeah, because if you are a buyer, and if you're a strategic buyer, you actually do have a lot of cash. Your company is doing well. Growth still matters. The market is giving you premium valuation for profitable growth. And you are a little bit concerned that I've done a lot of pushing on my higher cost to the consumer. Maybe that party is over. Maybe margins are going to be compressed. I still need to invest in supply chain. I need to invest in technology. Where's the money for all of that going to come from?
How much of this is a function of private equity, and how much do we think the private equity is the smart money or not, insofar as they represented something like 40% of the market just about a year and a half ago. Now they represent a quarter of it. That's a big chunk to take out of the M&A space in terms of even a strategic trying to divest an asset today.
Yeah, and I've been asking all the private equity guys across the globe, really, the same question. Is the same people who in 21 were preempting the auctions that we were running.
The cost of capital just went up by a lot.
Sure, but cost of capital is only one part of it. The valuation has also come down. So if you were willing to pay 18 times in that market, but you're not willing to pay 9 times in this market, and different, people tell me some curious things. It says that if you made a mistake in 21, it's okay, because all the cool kids were doing it. Whereas today...
Right, because the pension funds look at everybody and it's all, life is relative.
Exactly. It's like, hey, everybody was investing, I was too, and, today I have to take a mark on it. But today, you're probably staking your career if you do a deal. And so the simpler answer is, let me just not do something and wait. And you ask every person, what are you waiting for? Certainty. Really? When is that going to come? How is that going to come?
What would boost confidence?
Most people say that knowing that the Fed is done and seeing the beginnings of rate decline. But however, you just need to have conviction in the asset that you're buying. Because if you have conviction, how does it matter? Are other people looking at it too? Am I the only one? I mean, it sometimes just feels weird to me that in 21, more people were willing to deploy capital, because you asked the question about smart money.
Right.
Because if you're smart,
and that would have been the dumb money, actually, at the time.
Whereas today, I would deploy more capital. I'm not an investor, I'm a banker, but it seems to me that...
the problem with M&A, as you know, is that when people are confident, they make the mistake, and when there's no confidence is when they should be doing the deal, but they don't do the deal.
You need more courage and conviction. But when there is somebody who has that courage and conviction, I think you have the ability to put some very smart deals together.
I didn't hear you say once that prices are too high. We've watched the market run up significantly, and that's not an issue that comes to mind?
No, I mean, there is still the issue of seller-buyer valuation mismatch, but usually it's solvable through structure. But it requires two people who are kind of willing to get in a room together. So we're doing more negotiated deals. The deals that are happening are buyers approaching a target company unsolicited and just going and knocking on their door, right? So I'd say decade-high level of unsolicited, not hostile, but unsolicited
activity. What if
activity.
it's years until we get into a declining rate environment? What if it's years? It could be, couldn't it?
Yeah, you can't keep waiting for that.
Oh, I thought that's what you were waiting for.
Not me. Some people tell, some of our clients that we ask is, exactly, when I ask them, what are you waiting for? What is the certainty you're looking for?
Rates peaking and starting to come down.
Correct. But again, in 22, people said that valuations are adjusting. Valuations have somewhat adjusted, especially there's a lot of private companies, right? Many of the sponsors own companies that they've invested in that need to get monetized. The IPO markets are showing signs of hope, not for every company, but beginning. And so it almost feels like in February, we're going to have this massive backlog of dual tracks that we have to bring to market.
The IPOs that got out of the gates haven't performed all that well since. Is that a problem?
People will watch that. People will watch to see. And also how many companies can have the type of story and growth and margin characteristics that
Maybe
the companies that just went had. Yeah. So it's not a lot of people that fit that playbook. But at some point of time, people need companies to invest in too. So the IPO market will come back for more and will be available to more companies. And you'll be silly not to look at a dual track.
Back to Joe's point of the FTC, just regulatory scrutiny.
I think you're ignoring her because you don't think she's going to prevail.
No, I think especially with the elections coming up, right? Especially if it is, you have to think about either a Biden regime or a Trump regime. Both are known in some ways because we knew what antitrust environment was.
Neither one of them was that great, right?
Exactly. Neither one of them were that great. In one, it was a lot about how do you protect the franchise for a longer period of time and break fees. And today, in this regime, it's much more about willingness to litigate. How much money are you going to set aside for litigation? And can you hold the selling company's franchise together for that period of time? So it's a different calculus, but neither of the past, two administrations has been that great from an antitrust perspective.